Everyone, and thanks for joining me today. We're going to be talking about and focusing on how to make smarter, data driven decisions for your Shopify store to maximize performance during Q4. The fourth quarter is often the most critical for e commerce businesses, and leveraging data gives you a real advantage when it comes to making strategic moves. Understanding your store's data really helps you identify trends, spot opportunities, and uncover potential challenges before they become issues. Whether it's optimizing conversion rates, improving customer lifetime value, or reducing abandoned cart rates, we'll dive into how you can use key Shopify metrics to maximize your Q4 profits. Let's get started. My name is Jacob Curtis. I'm a CPA, certified Proud First professional, and a business coach. And I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, and taxes off business owners, and to provide them practical business advice that helps e-commerce stores piece together financial freedom. I'd love to hear your thoughts and questions on today's episode, so please leave a comment below and remember to like, share, follow, subscribe, all those good things. Q4 is a make or break time for many e-commerce businesses. During this period, you can often see the biggest sales, but competition can also have huge spikes, and consumer behavior can shift dramatically. This is why relying on data rather than intuition is essential for success. For instance, if you're going by purely intuition, you might focus all your efforts on promotions, thinking more discounts will mean more sales. But if the data shows you your abandoned cart rate is high, you might be missing the real issue. Perhaps your checkout process is just too complicated. Acting on the data, you can resolve these friction points and see better results than from blanket market promotions. Imagine you improve your checkout process and reduce your abandoned cart rate by 5%. For a store with 10,000 visitors, that could mean an extra 500 completed purchases, driving up your revenue pretty significantly. One of the key metrics you should be watching is your conversion rate. This tells you how well you're turning website visitors into paying customers. Shopify tracks this for you, and the industry average tends to fall between 1% and 3%. So let's break this down with an example. If your Shopify store gets 10,000 visitors in a month and you're converting at 2%, that means you're making about 200 sales a month. Now, what if you could increase that conversion rate by just 1%? Suddenly, you're making 300 sales. That's an additional 100 sales without needing to drive any more traffic to your store. To improve conversion rates, look at where your customers are dropping off. Is your site slow? Are your product descriptions not compelling enough? Small tweaks like speeding up the page load times or offering free shipping or even tweaking your descriptions can lead to significant big gains in your conversion rate. Next up is your average order value, or AOV. This metric tracks how much your customers are spending per order on average. Increasing your AOV means more revenue per transaction without needing to attract new customers. For instance, if your AOV is $50 and you're processing 200 orders a month, that's $10,000 in revenue. But if you can increase your AOV by just 10%, maybe through bundling complementary products or upselling, your new AOV becomes $55, turning that $10,000 into $11,000, an extra $1,000 in revenue with no extra marketing spend. Strategies to increase AOV include offering product bundles, suggesting higher-end alternatives during checkout process, or creating limited time offers like buy one, get one 50% off. Shopify's built-in apps and analytics can help you track and implement these strategies. While it's tempting to focus on getting new customers, increasing the lifetime value of existing customers is where the real profit lies. Customer lifetime value, or CLTV, tells you how much revenue you can expect from each customer over the time they shop with you. For example, if your customer lifetime value is currently $100, and you acquire 1,000 customers this Q4, that's $100,000 in revenue over time. Now, if you increase your customer lifetime value to $120 by encouraging repurchases through email campaigns or loyalty programs, for example, you've just increased your long-term revenue to $120,000. That's $20,000 more from the exact same customers. So use Shopify's automated email marketing tools and create campaigns that re-engage past customers with special offers, exclusive discounts, or personalized recommendations. You can even send thank you emails after a purchase, which goes a long way towards building customer loyalty. Abandoned cart rate is another critical metric to monitor. On average, about 69% of online shopping carts are abandoned. That means nearly 7 out of 10 customers who add something to their cart don't actually buy it. But you can turn many of those abandoned carts into completed purchases with the right strategy. Let's say your store gets 1,000 abandoned carts in a month. If you manage to cover just 10% of those, you've turned 100 abandoned carts into sales. If your AOV is $50, that's an extra $5,000 in revenue. So Shopify's abandoned cart recovery features can help you automate follow-up emails or offer incentives like free shipping or small discounts to encourage customers to complete their purchases. Customer acquisition cost, or CAC, is another important metric to keep an eye on. This tells you how much spending on marketing and advertising it takes to acquire each new customer. For example, if you spend $3,000 on ads and acquire 100 new customers, your CAC, or customer acquisition cost, is $30. The key is to balance your cost of acquisition of a customer with your customer lifetime value. If your customer acquisition cost is $30 and your customer lifetime value is 100, you're in pretty good shape. But if your cost of acquisition increases to $50, you're cutting into those profits pretty steeply. Shopify integrates with most ad platforms so you can track your ad spend and compare it with the revenue you're generating. Keep an eye on your return on ad spend, or ROAS, ROAS, to ensure your marketing efforts are being profitable. Data is only valuable if you act on it. For Q4, make it a habit to analyze your Shopify data weekly. Look at your conversion rate, your AOV, your CLTV, and abandoned cart rates. Make small adjustments each week and track the impact those changes have. Over time, even a 1% improvement in each area could lead to thousands of dollars in additional revenue. Now, start small, maybe by improving your checkout process or adding product bundles or something like that, and measure the results. The data will show you what's working, so you can double down on those strategies. Now, if you have questions or need assistance with managing your company's finances, don't hesitate to reach out to me. I'm here to help you piece together financial freedom. Schedule a call with me to get started by scanning the QR code on the screen or clicking the link in the first comment below, or going to jacobcurtiscpa.com/5-strategies-calendar to get started. And remember to follow me, Jacob Curtis, CPA, and Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks for watching, and we'll talk to you soon.